How to trade ICT's final hour macro. This trade is going to happen around 3:15 to 3:45. I recommend you go to the charts at 3 o'clock. That way you can see how this 15-minute candle prints. So come to 3 o'clock New York or Eastern Standard Time. And what I would do is also look at from a point of looking at liquidity that hasn't been taken. What liquidity is still on the board? In this case, it's going to be a reversal trade, but it doesn't always have to be a reversal trade. Next example, I want to show you that it's actually just a trend trade, but you can see the pools of liquidity, the same idea of looking at what is still on the table. So in this case, you can see that we just kept on coming down for the day. Sell side have been taken, sell side have been taken. Come down and taking sell side one more time at this low right here. If I do like coming at the final hour macro, I will come at 3 o'clock, giving myself that 15-minute window. And you can see sometimes your entry will come before that. So if you do like the fair value gap entry, this is a fair value gap entry on the 2-minute and the 5-minute. And you see this pop down here at exactly 3:15. Coming back, 3:25. And then we shooting back up. This definitely would be my entry or one of these two entries right here. Confirming that we're done going into this fair value gap. I want to see the reaction. And then looking at this order block right here. Expecting that candle to hold and trade up higher. And the biggest thing on here, trade will look something like that. And the biggest thing on here is trusting that this is the pool of liquidity. We have untapped buy side, all this untapped buy side up here. This gray box right here is the new week opening gap. It's an old new week opening gap. So again, that was my draw liquidity. And this idea, I'm losing all this equal highs and just targeting up higher. You can see this is why this is a good run. And it's a great way to look at the market again, just looking at from the standpoint of what is left on the table. That's how I like it. And like I said, I don't want to look at it from a reversal standpoint because it doesn't always happen reversal. It's always majority of times I've seen it work where it's reversal or the trend is whatever pool of liquidity is still left on the table at this time. And that's why I like coming at 3 o'clock. Kind of give myself to, all right, see if we start trading up towards these highs. Clearly we did. This has been an entry. Expecting this to be a breakaway gap after we confirm that this is an order block. So we come down, pop above the order block, then we come back down, respecting that. I don't see this trade too, right? I don't see this trade too. I talked about in another video how you can understand breakaway gaps, and you just target up higher. Nothing really crazy about it. It's just a nice really trade. It's a nice clean trade, and they happen a lot. So you can set your clock alarm for 3 o'clock, and I'm gonna go to the next one real quick. All right, now we're going to the next day, which is the very next day. You can come to the chart at 3 o'clock, which should be right here, this line right here. And then you're seeing what price action is doing. I can see both sides. Well, this is a pool of liquidity, right? Sell side, and we got a pool of liquidity buy side. In this case, you could absolutely took this trade. Just know that this is not a trend trade. It's be reversal. You're looking for that reversal and taking this as a sell side liquidity, and then just trying to fill in this. It's a 5-minute, 15-minute fair value gap. So this being your entry. Again, look at notice how you come to the charts at 3, like I told you, and 15 minutes. You can see 320. Look how these candles forming. See if we're going to go for the buy side. Clearly we're not. Maybe this is right here, 330, 332 could be your entry. Taking that sell right there inside that fair value gap and putting your stop loss above here, and just aiming for this to be, going towards a 15-minute, 5-minute fair value gap. In my opinion, I would 100% wait for something like this because on the higher time frame, we was very bullish, and I see that we left all these clean highs. It'd be different if we trade up higher, then trade lower. That'd be completely different. But we left all these highs and then just, kind of just traded lower without even attacking all that buy side. So in this case, your entry would be around that 350 macro. Again, very end of the macro of this trading session, and literally when we confirmed that this was a breaker, a bullish breaker, low high, low low, rip up, extend your up close candles. This would be a bullish breaker. Getting in somewhere up in here. Then you got this order block right here. You can see we have holding price. Again, I talked about another video. Notice how we have a stop rate, and then we're going opposite direction. Now we're forming a breaker. No inversion, not inversion for very gap, but a breaker. And boom, and this could be seen as a breakaway gap. And I talked about in another video how that always happens. This is another example of it. So the trade looks something like this. Once we got that confirmation, we start trading up higher. I always start expecting this to be a breakaway gap. So my trade would been like something like this. Just not getting all this, just looking at above these highs. You could probably do extension over here. What is it? You could probably do extension if you just wanted to, like hold run or something like that. So You're gonna hold runners maybe somewhere up in here, but definitely we've been out somewhere above these highs. And again, the idea is, what is the pool liquidity? Notice how we got these clean highs, right? We've been trading higher, and like I said, we already took a sell side right there, come down, took sell side one more time, and I'm not seeing really bullish momentum yet. Took sell side one more time into this fair value gap, and then again, this could be a reversal trade. Don't like reversals. I like going with a trend. That'd be more ideal. And then in this case, you can see that we started trending back up in that 350, 410 macro. Again, the way that I like to trade the 5 hour macro is looking at the pools of liquidity, not necessarily looking for reversals. I would absolutely not took this, and I absolutely took this. Again, I'm looking not necessarily reversals. I'm looking more majority of times layering what I can on the high time frame, but majority of times I'm looking for where is the pool liquidity, and then allowing time to show me, okay, when are we going to start targeting that? In this case, if this is my target for buy side, this pool liquidity, I would have waited for us to be bullish. And in this case, we were bullish in the 350 macro. That's just the way that I view it. Again, looking at the pools of liquidity, not just looking at reversals or trends. I want to see the pools of liquidity and then wait for the market to show me when we're going to start aiming towards that direction. That's just how I view it. Like I said, that's just the way I think about it. It's definitely helped me. And then also come 15 minutes earlier. 15 minutes, so come at the charts at 3. That way you can see how that 15-minute candle is printing. Sometimes you get entry before 3:15, so sometimes it works out perfectly. But yeah, that's all I got. I hope this video helps, and see you next one.